Uh, Well, the other day, if you were watching, and if you weren't, you should have. And if you haven't seen it already, we should put a card up later, CERN, and let people go back and check out part one because it was really quite interesting. At least it was to me. It should
I
have
think
been.
so. It was the prelude to what we're about to talk about today.
Yeah, yeah. So we're going to be talking about Robotaxi and some other things as well. I think we'll get into a little bit of politics and some stuff about the markets and about bonds and things. But let's start off though with the subject that everybody seems to be the very most. In fact, people are so interested right now in the Robotaxi launch in June that Optimus is like gone. Is like nobody's saying anything at all about the Optimus, and that makes me sad. But
Well, Optimus is waiting and ready. He's there. Don't
he's
forget
there.
about him.
He's there. Yes.
Yeah. And he'll have his day in the spotlight soon.
Yes. Once we
Don't
get
worry.
kind of Robotaxi launched, maybe we'll start to see some videos of Optimi walking around the manufacturing facility and lifting and placing and or doing more sophisticated tasks. So that could happen in the next few months as well. But everybody seems very much focused on
Hmm.
this first project, the Robotaxi. So I understand that you've got a slide.
I do. I
Mark
do.
that.
We'll start with
Perfect.
some slides from ARK Invest. This one, which I think most people have probably seen before.
Sure.
And this is worth just a few minutes to kind of discuss because the existing ride-hail business, right? Think of Uber and Lyft.
Yes.
And I suppose maybe you put the taxi services in there as well.
Sure.
Depending on how it's priced, at $4 a mile cost to the customer, that's about a $4 billion market opportunity.
Okay.
$4 billion is a lot for a person,
World,
but pretty small.
worldwide.
Um, this is, I'm guessing these numbers are worldwide. That's a good question. I think they probably are.
I think so. Yeah.
Yeah.
Okay.
Um, and then if you get it down to $3, the market opportunity expands from 4 billion to 30 billion,
Yeah.
right? So a dollar per mile reduction, the market expands almost tenfold.
Yeah.
And then you get it down to a couple of dollars a mile. Now you go from 30 billion to 100 billion market opportunity.
Yeah.
And they're saying that's the existing addressable market for ride-hail companies charging between $2 and $4 per mile in Western markets is about $134 billion.
Hmm.
Okay. So a
Hmm. Yep.
decent sized market and a nice
Yep.
opportunity for Uber and Lyft,
Yep.
which they've been capitalizing on for many years now. All right. What happens now if you get the cost per mile to the customer down to a dollar per mile?
Right.
They're estimating that suddenly the addressable market now goes to about $1 trillion.
Which apparently is not apparently they didn't do it in scale.
No, no, yeah, that's right. And what happens is you're gobbling up the x-axis here is they're showing trillions of miles.
Right.
So yeah, but and I think that's one of the hard things about reading this chart is it's not showing that dollar scale, right,
Yeah.
as
Yeah.
well as it could be.
Right.
And then you get down to if you get down to 60 cents per mile in terms of cost,
Hmm.
they're suggesting that the market opportunity there is 2.4 trillion in non-commuting miles in higher income countries priced at 60 cents a mile.
Hmm. Hmm.
Okay. And then another couple of trillion long tail of demand priced at human-driven ride-hail prices of 35 cents per mile in lower income countries.
Hmm.
That's where we start to expand to the rest of the world.
Right.
And then they're saying ultimately 5 trillion or additional 5 trillion low cost accessible autonomous travel at 25 cents a mile.
Hmm.
And that's how they get to a $10 trillion market opportunity for ride hail.
Right.
So tremendous opportunity initially to undercut existing ride hail services that are charged between $2 and $4 a mile.
Hmm.
Easily done, no problem. And then over time, expanding to some of these other market opportunities.
Right.
So I just want to make sure everybody understands that as you lower the cost per mile to the customer, the market opportunity expands more than you realize.
Right.
And in addition, what they're not showing here is as you get the cost down, people will use it more.
Right.
The demand will go up
Right.
across the board from everybody, right? So this isn't static. Okay.
Yes, and it won't be in those giant leaps. It won't one day be everybody's
No,
charging three, and now everybody's charging two, and then everybody's charging $1.50. It'll just be the markets will be playing with the pricing, and it will slowly work its way down as more and more of them are available, and more people start using them for different purposes.
that's right. And this is another chart that we've seen from ARC before as well. It shows the cost per mile of a personally owned vehicle. So back in the horse and buggy days, it cost $2.10,
Hmm.
right? And then we had a step change, a 50% reduction in 1934 down to $1.10,
Mhm.
roughly 50%. And then that's held constant now for almost 100 years. So it's hard for us to conceptually understand what's about to happen here because we haven't experienced it, right? This is one of the flaws of humans. Unless we've experienced it, we don't really get it.
Right.
But we're about to reduce the cost per mile down to something like 25 cents, right? And so it's going to completely upend transportation. I can't say it strongly enough. You have no idea what's coming. Once these companies, once Tesla, has FSD at a point where it can safely drive without a human driver supervising it, it unleashes what's shown on this chart.
Right.
Okay.
And I think
So,
and I think it's important, and we've talked about this on my channel a lot, so this is not new to folks that are regulars, but I think it's important to note that at the same time that the price is dropping dramatically, the experience is improving dramatically.
yeah, it's not going to be a hard sell to
No.
convince people to save money to ride in a Robotaxi.
Right.
We've already seen with Waymo, they're actually charging more than Uber and Lyft because people are opting out of being in a car with a driver.
Right.
They want the driverless experience because they don't want the hassle of dealing with the potential issues with the driver, particularly female passengers.
Right.
So, you know, that's a case where Waymo is actually able to charge more
Yes. Yeah.
than Uber and
It's
Lyft.
important. I think this is important. And
Yep.
uh, Herbert and I had a kind of a back and forth the other day about whether Tesla would come out of the gate charging $1.50 a mile in order to undercut Uber and Lyft, or whether they would come out of the gate charging, $3 a mile in order to just go in where they thought the market was and potentially be right around the Waymo pricing, since it will be an even better experience than Waymo by a lot. And having reviewed it with you just now, I think the argument for charging market is stronger than it was when we did that show the other day. I think, and the reason for that in my mind is because the TAM on the $4 mile is so big.
Mhm.
So, or even the 350 mile, that there's such a huge TAM on that pricing level that it would make no sense at all to go in at that lower number. What do you think?
It makes the only thing that makes sense is to go in at what the market will bear. If you go in too low and you don't have the capacity, right, the number of vehicles in that market, you're going to create a terrible customer experience because everybody's going to be waiting for a robotaxi.
Hmm.
Now, maybe initially in Austin, Texas, that's great. Maybe that's what they want. They want to show that people are lining up to get
Right.
in robotaxis.
Right.
Fine. That'll be for marketing purposes if they do that. But from an economic perspective, normally, if you're not looking for some kind of marketing event, you want the best customer experience possible. And to do that, you have to price it at the market, whatever
Right.
that is.
Right.
Now, there's no doubt that as they add capacity, as they add vehicles to the network, the price will come down and it'll
Hmm.
come down pretty quickly.
Hmm. Hmm.
And by the way, it won't take much to undercut and completely destroy the economics of Uber and Lyft
Right.
unless they are also able to play in this space and participate perhaps in Tesla's network.
Well,
I think
Uber,
it's an open question as to whether they will be able to.
so Uber was out this morning with a very strong statement. I don't know if you
Yeah.
saw it. Do you have that as part of your,
I don't. Yeah, unfortunately, I didn't include that. But to
so,
me, that statement seemed very aspirational rather than,
oh, it was,
clear that they were going to be players here.
yeah, it was very clear that he said there's 150,000 of their vehicles that are already Teslas.
Yeah.
Out of their fleet, 150,000 are already Teslas. And he ended his statement. This is the CEO of Uber. He ended his statement by saying, between what was it, something and his charm, I forget, between the opportunity and his charm, or something like that. He certainly expected that Tesla and they would be able to do some kind of a deal. So I just
Yeah.
don't see how it's not going to be. I don't see how he gets out of going that direction. I don't see what the options are for him other than that.
Well, again, it's clear because you look at this left side of this chart, and Uber is playing in this $2 to $4 space.
Right.
So if Tesla takes that away for them by undercutting it down to $2 or $1.50 or a dollar, whatever it ends up being,
Right.
and of course, it's always a moving target. It's going to be market pricing all the time, and
Right.
everybody knows how Uber works, right? The prices are constantly adjusting.
Right.
Um, that takes away Uber's business, so
Yeah.
they have to adapt in some way, and he has to hope that Tesla will allow them to participate in their network.
Right.
I think it's an open question as to whether Tesla needs Uber,
Yeah.
right? And if Tesla doesn't, then can Uber partner with Waymo and have something that's competitive? I think that's also an open question.
Yeah. No, it's a very going to be again could be another MBA program down the street with regard to how this all played out, because
Yeah.
it's going to be again the biggest retail business ever. The combination of these rides,
Yeah.
and so yeah, it could be fascinating.
So the one thing that I had taken a look at about a year ago was how many autonomous vehicles do we need in the United States
Hmm.
ultimately if everything goes autonomous?
Hmm.
And the way I approached that was actually pretty simple. I took a look at the number of annual miles that are traveled in the United States each year.
Hmm.
The government tracks this. They have 5,000 monitoring stations around the country that basically counts traffic.
Hmm.
Okay. And they come up with these numbers. It's about 3.3 trillion miles. And the last update here is from November. Over the last 12 months, the last year, 3.3 trillion miles traveled in the United States.
By automobiles or by all vehicles on highways and streets, or
I think it's all vehicles. I don't think it's just cars.
okay.
I couldn't tell from the data whether or not they strip out, trucks and so on,
Right.
right? Um, and there's about 283 million or so vehicles in the United States. So each vehicle on average is traveling, 11 to 12,000 miles a year.
Right.
All right. Some people drive a lot more, some people drive a lot less.
Yep.
Okay. So if we figure out then, if we say, okay, eventually, and this is in a dream world where everything's autonomous. Again, this is going to be that's going to be a long way away. But if we just go with this and look at the limit, right, what the right side goalpost would be, if you had vehicles that were utilized at 30% of the time, then they would travel about 60,000 miles a year,
Hmm.
and therefore you would need 55 million of them,
Hmm.
which is only about 20% of the current fleet.
Right.
Now, if you could improve the utilization, then you would need fewer vehicles, maybe only 25 million.
Right.
The problem with utilization is the higher the utilization, the worse the customer experience is at peak times.
Hmm.
You want some slack in the system so that when there's peak, you don't have people waiting around for a half an hour for a vehicle.
Right.
All right, think about going to the concert and then suddenly waiting for a Uber or Lyft to take you home.
Right.
Everybody wants one at the same time. Good luck getting one.
Now, by the way, parentheses here, that might be one of the advantages of the Airbnb part of the opportunity.
Hmm.
If you and I are able to put ours into service, what better time would we want to put them in than when we could get the most dollars per
That's
per
right.
time? And so that might be peak times or whatever. So
Yeah, or when there's events, right? When there's a big concert, a Super Bowl in your city or whatever,
Exactly.
put your car in the fleet and make the extra dollars.
Right.
You might get $4 a mile in that case,
Mhm.
right?
Mhm.
Um, Now, if we just look at urban miles and we say, okay, let's factor out rural miles, that's going to be a long time coming. So that's about a third. Now we're down to about two-thirds of the miles urban. Now we're looking at a fleet between 17 million and 37 million. And I would tilt a bit more to this end because I think that you want a fleet that's got some slack in it to deal with rush hour and just peak times in general. Um, and so in that case, you're looking at maybe, 10 to 13% of the current US fleet
Mhm.
in terms of robotaxis.
Once again, I'm going to put a parenthesis in here. What this could, the rural miles could again be part of the Airbnb situation because this is what works for Airbnb so well is some of these urban, most of the ones I've rented have been in urban settings where there's no real serious hotel opportunity. So where there may not be, you may not be able to justify very many vehicles in a suburb or a rural setting full time. Having people that own them put them out to use would be maybe a really good extra income.
That's right. Now, as we previously talked about, as you drop the price, you're going to get more demand.
Right.
So I just picked a number out of the air and said, okay, what happens if this 3.3 trillion goes to something like 5 trillion? How many vehicles might we need in that scenario? So you're looking at probably, 55 to 83 million, 84 million vehicles. If it's all miles. And if we're just looking at urban again, we're looking at, maybe 40 to 60 million vehicles
Mhm.
in terms of, about 15 to 20% of the US fleet, in terms of percentage. So, this is going to eat into all kinds of other services. I think you've talked about this, whether it's short haul air flights, whether it's public transportation, right? So we're going to get an increased number of miles from that too, in addition to extra usage. And of course, we also need to factor in the fact that you can now use these vehicles to deliver packages. And we suddenly might be adding a lot more miles for that
Yes.
because it'll be so cheap to use these vehicles for those kinds of services. And by the way, that's another revenue opportunity in addition to charging just for passenger miles.
Yeah, Brian Wang last night on the show brought up the idea that I didn't know this that the airline companies use passenger jets at night when they don't have as much traffic. They put covers over the seats and they load them up with boxes and use passenger jets for package delivery. So
Hmm.
his thought would be that these cars at night, when they don't have anywhere close to the amount of needs, could be delivering packages for all kinds of purposes.
That's right. Yeah. And so in that case, the vehicle utilization goes up, but it's for a different purpose. So I think these utilization numbers are still useful in terms of looking at it in this light as far as passenger miles.
Mhm.
Okay. The other thing too, I just want to remind folks of is this relationship between utilization and profit. So if you have a vehicle and you're only using it 35% of the time, the profit per vehicle is going to be lower. But if you look at it from a fleet perspective, it doesn't really hurt you too much in terms of profit, whether you're running it at 30% to 65%, you're still pretty steady. Okay. And
Mm.
this is again urban miles only, just replacing the 3.3 trillion that we have in the United States. I estimated if the profit is 20 cents a mile, you're looking at 400 to 450 billion in annual profit from that industry.
Yeah,
Okay. If it's 10 cents a mile, then it's half of that.
because the only thing that continues when you're not driving, when it's not being driven, when it's sitting in a parking lot, the only thing that continues is the depreciation. And the depreciation would be on the order of less than $1 a day, right?
Yeah, depreciation is interesting on an EV because if you're not using it, it'll just last longer.
Oh, yeah.
It's probably not depreciating as much, right? And
Yeah,
in
I think
fact,
I
these
said a
vehicles
dollar a day.
here,
I think that's wrong. I think a dollar a day is wrong.
yeah,
Let's divide 16,000 by 5 years. Is 5 years too long?
it'll depend on the miles. If I go
Oh,
back to this chart,
let's divide. Oh, you've got it. Okay.
right? If you're utilizing a vehicle at 65%, it might be doing 130,000 miles a year. That vehicle is not going to last
Right.
nearly as long
Right.
as one that's being utilized 30% of the time and doing
Right.
60,000 miles a year,
Got it. Yep.
right? Uh, this one might be good for 2 or 3 years, and this one much longer.
Right. Right.
So, but it is interesting from a fleet-wide perspective. You want actually low utilization to build some slack in the system. And from a customer experience, you want that. You want customers to have the vehicle almost instantly. As Elon, I think Elon's mentioned about, magic. You walk outside and the car's right there,
Right.
right? So therefore you need relatively low utilization. But you could have this package delivery service also kind of running in the background,
Right.
right? And so that's actually improving utilization across the fleet for that service.
Right.
Yep.
And I did it in my head finally. The depreciation wouldn't be any more than $15 a day, might be closer to $12 a day.
Okay. Yeah, it's probably better to look at it in terms of depreciation per mile.
I understand that. Mhm.
Yeah. Okay, so back to another ARK Invest chart. And you might say, what does this have to do with Robotaxi? They're talking about here the growing use of AI agents in consumer shopping should streamline product discovery, personalization, and purchasing. And they're saying that AI agents could facilitate nearly 9 trillion in global gross online consumption by 2030. Okay, this is where your AI goes out and does your shopping for you.
Yeah.
Okay, all this stuff has to be delivered. What better to use in addition to the current delivery network that's out there? If we're going to have this kind of growth, you need other delivery vehicles. A robotaxi network is perfect.
Hmm.
So if you want to look at an opportunity to layer on additional revenues, this is it. And by the way, I've said that I think eventually the cost of a robotaxi for consumers will approach zero.
Hmm.
And the reason is there's plenty of other revenue opportunities.
Right.
Now, that's not anytime soon.
Yeah. Well, you're talking about the other opportunities for the vehicle, but there's also other ways that the revenue comes in, like advertising,
Yeah,
et cetera. So, yeah.
that's right. Um, this is their robotaxi industry forecast by 2030. And they think the number of robotaxis will scale to roughly 50 million globally.
50
And
million vehicles globally by 2030.
yeah,
Okay.
okay. And with Tesla, the 50% market share is their assumption.
Right.
They do say that if Tesla were to allocate 100% of its future vehicle production to robotaxi, instead of the 30 to 40% assumed, Tesla alone could hit ARC's robotaxi industry forecast in 2030.
Easily.
Yeah.
Yeah. Yeah. Yeah. Yeah. Okay.
Okay. And we're starting, from pretty much nothing at this point. Okay. I don't want to harp on this too much, but I also do want to harp on this. When you get cost declines in the order that we're looking at, you get massive change. So this is the cost decline of a human-driven diesel truck. Okay, the delivery cost per ton mile can drop 57% when you look at autonomous electric trucks.
Yeah.
That's massive disruption to an industry.
Massive.
Now, it turns out this industry it probably is happy about that because there's a massive shortage of drivers.
Right.
or there will be in the future. When you get local delivery costs going down 83%,
Hmm.
you're going to have an explosion in local deliveries,
Right.
right? By robots or whatever means we're using here.
Hmm.
And then local small item delivery cost, you're talking about a 94% drop. And then here they're talking about drone deliveries.
Yeah.
Okay.
And it's already started. I mean, they're already doing it
Yeah.
in China and a couple of cities here in the United States. So yeah, and Brian Wang has talked about the truckload, the semi-truck business, or even the large truck business, um, having a bigger impact on the economy than even the robotaxi business would have.
I
Because
think they're both sizable. I don't know, I haven't compared the two sets of numbers, but yeah, I could see that. I could see that part of it being huge.
the amount of
Yeah.
money that goes into a tomato um,
Yeah.
in trucking, between fertilizer being trucked and the tomato being picked and the tomato being taken to the distribution center, and then from the distribution center to the store, or possibly to a packaging facility to be packaged or to be processed. I mean, it just goes on and on and on as to how many times these things are touched by a truck.
Yeah. And this is a perfect segue to what we're going to talk about next. But
Okay.
one of the opportunities is actually to begin to grow things more locally.
Uh-huh.
And with humanoid robot labor, that may be possible.
It would be necessary in my home
Yeah.
because I kill plants. Yeah.
Yeah.
It's,
Yeah.
I'm the I'm the I am the antithesis of a plant grower.
The plant next behind you there is looking pretty good, but I'm not sure that one's
It's
real.
great. It's fantastic. You
Yeah.
can't hurt it. It's amazing. I don't know what
Just
the
need to make sure you dust it every now and then.
Oh yeah, dusting. Yeah, dusting.
Yeah. Okay, so let's shift to humanoid robots, even though the topic, these days is robotaxi, but humanoid
Yeah.
bots are coming too.
Yeah.
And we had a very significant announcement today by a company here in the US. Apptronic announced a $350 million Series A funding round.
Yeah.
It's completed. Jeff Cardenas was on CNBC this morning talking about it. They were trying to get out of him how much the robot costs today. He wouldn't say. They tried to kind of trip him up by saying, "Oh, these bots cost $500,000 to make." Um, but their goal is to get the cost down to 50,000. I'm not sure exactly what time frame, but probably fairly
Right.
soon. Um, but certainly the cost to make these bots today is pretty high because they're made in pretty small numbers.
Right.
Um, there's an image of their bot there. Um, and the company was founded in 2016. They raised 28 million, and they've actually made bots for NASA. They've made bots for other companies.
Mm.
These guys have been around quite a while, and one of their investors now is Google.
Yeah.
And I have said that all of the big cap tech names should be looking to be players in this robotic space because this is the next big thing.
The biggest thing ever.
Yeah, if not ever. Yeah. Um, so this is kind of exciting. This is another U.S. company, Texas-based company, and they are going to use this money to scale up production of their bots
Mhm.
and meet significant customer demand, they say.
Mhm.
Okay. Um, and they have, speaking of demand, um, including in the automotive, electronics manufacturing, third-party logistics providers, beverage bottling and fulfillment, and consumer packaged goods. So I believe they've announced, like Figure did, a partnership with BMW.
Mhm.
Electronics manufacturing, I'm not sure. Third-party logistics providers, they've worked with, um, is it GXO?
Mhm.
The company that does the logistics for Spanx and other brands like that.
Mhm.
I think Sanctuary had a contract with them too, if I recall. Beverage bottling, well, that's either Pepsi or Coke. All right, and consumer packaged goods, that could be a bunch of companies, but they're talking about significant demand from their customers. And this is what I would expect to hear because, again, if I'm the CEO of one of these companies, I don't want my competition getting humanoids and me not being on that list too,
No,
right? You don't want to be last.
no.
Okay. Yeah, it's Mercedes and then GXO Logistics is one of their previously announced partners. Okay. Nathan Boyd, who is a robotics engineer at the company, says, "Big day for us. Finally announced our Series A for 350 million. Lots of exciting work is starting to bear fruit." So another Texas company just around the corner. Actually, I think it is in Austin, along
Interesting.
with Tesla. Um, Another robotics company, Figure, they put out some pictures of their new building, new campus, I guess,
Mhm.
and looks like a pretty nice place.
Yeah.
So they're making some strides too. And then CEO Brett Adcock there is saying, "Here's the campus almost ready, moving in a few weeks, and we're greatly expanding manufacturing, robot test areas, fleet operations, engineering, and design. If you want a tough but rewarding job and a chance to help ship millions of robots, join us." So,
He also announced he was going to have a very, very big new video or big increase in capability. I thought that was going to be like yesterday or today, but I haven't seen anything yet.
yeah, I don't know if you put a time frame on it, but we should expect to see something from them. And then the final thing from Brad, he says, "In our lifetime, you will see more humanoid robots than humans when you're out and about." So that's going to be some adjustment, I think, for us to get used to a world like that.
Yeah.
This was interesting, and this is I initially thought this might be a new Tesla product. I was totally wrong. This has been around for a while. It's called the sunflower.
Hmm.
Sorry, solar flower. But it's kind of neat to be able to drive this up and unveil these solar panels.
Hmm.
And of course, the Cybertruck always adds to the photo. Have to include the obligatory Cybertruck in the presentation, Randy.
Right, right.
Yeah. All right. Let's go on to a couple of other little miscellaneous things. I thought this cartoon was kind of funny. Before, we couldn't afford it in a million years. Now, with interest rates, we can't afford it ever.
Ever. Yeah,
Sad but true.
yeah, yeah.
All right. You teased our discussion about the bond market, and it's kind of interesting. Right now, the bond market has experienced its longest drawdown ever. And a
Mm.
drawdown is when the market drops from a peak and goes down and then hasn't made a new high,
Yeah,
recovered that loss. And it's been
yeah.
54 months now. The
Wow.
previous one was 16 months.
Wow.
Right. And bond market traders, remember that in the 80s as being like the worst time ever, but we've eclipsed that massively.
Man.
The maximum drawdown amount was bond market was down 17% at one point.
Hmm.
Okay, so this has been a pretty tough time. Now, you and I are talking about some potential bright spots for the bond market going forward,
Mhm.
particularly if we do get inflation under control. And of course, with the January inflation report, maybe it didn't give us too much hope in the near term, right? But certainly with cuts in government spending, if that is achievable, if that happens, then that would be a great help to reducing inflation and
Let's
interest rates,
yeah,
which would
let's
bear fruit for everybody.
yeah, can we just say it again? I don't think you can say it enough. I say it, I don't know, I must say it at least once a week on the show, maybe more often than that. Inflation is not price increases. Price increases is a result of inflation sometimes, but price increases can happen for an incredible array of reasons. Right
Yeah.
now, they're talking about tariffs. That's a possible reason why a price might go up. You could have a change in currency valuation between countries if you've got import export. You could have raw material increases that have absolutely nothing to do with inflation. They could have to do with a drought, or they could have to do with some kind of a pandemic, or bird flu is a great example right now.
Mhm.
The price of eggs going up is not any evidence of inflation, has nothing to do with inflation. It has to do with a shortage between the amount of demand and the amount of supply that has been interrupted by an event, by a black swan, if you will, event. So inflation only comes from one thing, according to Milton Friedman, and the financial world of Washington today is they're all Friedmans on the at least on the financial side, not necessarily on the consumption side, but on the financial side. So, according to Milton Friedman, 100% of inflation is due to the amount of money that's out there compared to the amount of goods being chased by that money. And only the government has the ability to print the money.
Right.
And the only thing that can modify that is productivity, according to Friedman again. So productivity can modify that. You can have the government can put more money into the system, and if the amount of widgets that the individual is the average individual, the number of widgets or hours of service that are being produced by the producing part of the public goes up by a significant amount per hour worked, then you can have the inflation that's caused by the money supply that will then contract. So those are the only factors that are actually inflation. The rest of it is price.
Well said. And I have a good idea in terms of improving productivity. And we've just talked about it, and that's humanoid bots
Right. And robots and robotaxis, both of
or
them.
robotaxi. Yeah,
Huge
yeah.
improvement.
Any automation is a productivity enhancer for sure.
Right. And the other great productivity enhancer is taking government employees and putting them into the private sector.
Yeah, that's right. Yeah. So hopefully we see some progress on that. Um, this was a kind of a funny cartoon. Is that a long or short position? Says the guy to the guy who's hiding under the desk. I guess it could be either one these days.
Yeah. Yeah.
All right. This is kind of funny, but also very sad. Um, a friend of mine went through Toyota this past weekend. I'm reading from a post here. He chose a Highlander. He's not ready for an EV yet. The guy closing the deal focused on how they're the most stolen car. Upsell him a tracking system for $2,000. This was one of 10 different upsells, but by far the most ridiculous. The friend was not happy. He asked the guy how long it's been one of the most stolen vehicles, and the guy said, 10 years, and tried again to push the tracking system. My friend asked why they didn't try to fix the exploit, and the guy had nothing to say. Needless to say, my friend isn't buying a Toyota. Why wouldn't they fix this problem? Is it in their favor? I can't believe they've even worked it into the sales pitch. Insane.
It's because we know what I was in the security business for the first 15 years of 15, at least 15 years of my career, maybe longer, I guess longer, in small security hardware. So I know a lot about security. And, it's always a matter of being ahead of the thief and being tougher than your neighbor. If you make something that's harder to steal than your neighbor, then they'll steal the neighbor's stuff. And we call that the good neighbor policy in the business. So if you got a Tesla that's almost impossible to steal, then they're going to go steal a Highlander. Highlander could look at what Tesla's doing, and they could incorporate that into the vehicle, probably for less than $2,000, and then they wouldn't be stolen at all. So that.
I guess they have no interest in cutting off the source of revenue.
Oh,
Yeah.
yeah,
And it's probably some of the guys at the dealership going around stealing Highlanders at night.
that's probably
Yeah.
right.
Yeah.
Uh,
All right. Last but not least, I thought this was kind of funny. And again, this is not a political statement. I guess some will perceive it as such, but we've seen certainly lots of bumper stickers talking about how they bought this vehicle before they knew what Elon was really like.
right,
This one says, I bought this vehicle after I knew Elon was awesome.
right.
By the way, this is not on my Cybertruck, but
Not yet, not yet.
well, who knows? Yeah, my wife may put one on. Anyway, that's that. I'll leave that there without getting too political. Um, and in the previous show that we did, Randy, we talked about my new disclaimer.
Oh yeah.
Right. And so I would refer folks to that. Nothing we've said today is financial advice, but I
Right.
wanted to make sure that I included other members of your audience that are sort of in different groups.
Yeah.
And so on the left is kind of the people that are into rap.
Ah,
I made my disclaimer in kind of a rap song.
uh,
Now, I won't try to sing it because I'm not a rapper.
uh-huh.
But if you read it, a little bit of it and kind of think of a rap song, that's what this is for.
I see. Yes.
Okay. And then for the people on the right that are kind of valley girls, because I know you have a very diverse audience, Randy,
Yes.
I wrote that for them,
Ah, okay. All right.
right? Like for real.
Yeah, like for real. Yeah.
Okay.
Well, people can snapshot that if they want and have all the fun they want to with it. So are these Grok productions?
Grok helped me with this. Yes.
Okay. All right.
It did. Yes. Very, very useful to have an AI that does rap and Valley Girl imitations.
Yes,
Um,
and of course it's more important for you to put up these disclaimers it is for me since you are actually an advisor.
that's right.
You,
And it says that here. It says so Cern Basher is like totally registered financial advisor.
yeah,
So that confirms it here. Yeah.
yeah, yeah. Okay, so then we know it's for sure true because it's in print.
Yeah. And here Cern Basher's in the game. So that's another, disclosure for those folks so they understand what we're talking about. When I'm spitting on this channel, no advice from here.
Yeah, yeah, yeah. Now, if you
Right.
want Cern Basher's advice, you could always, hook up with him. His information is below. You can find him on X. You can find him on everybody's channel. I'm sure you can look up uh, uh, brilliant expert, no, brilliant advice, brilliant advice,
Brilliant advice.
brilliant advice. Yes.
Yeah.
So I mean, it says it right there. I mean, that would be the obvious thing to do is to call.
It's brilliant as in bright and light.
Oh, I see. I see. You didn't mean as in lots of. You sure?
That remains to be seen. Um, I was actually shocked that the regulators approved our name when we started our business, but they didn't have any trouble with it. But we've been very careful about how we've marketed
Oh, you
ourselves or
market
not
that.
marketed
I
ourselves.
see. I see. Okay.
Yeah,
All right. Well, hey, listen, one last thing before we go. I do want to spend one more minute on that bond issue because I think this is one, in my opinion, maybe the most important thing that an investor needs to know. And that is not financial advice, it's life advice. Maybe one of the most important things that investors need to know about what's going to happen over the next 60 days. The bond market is stuck above 4.5%. The 10-year is stuck above 4.5%. That is impacting your mortgage rates. That is impacting your auto rates on loans. All the large item purchases that you use personal loans for, all of those product categories are being impacted by still being at 4.5. Now, 4.5 is actually a really good rate historically, but it isn't what we're used to. So it's hurting sales in those areas. It's keeping builders from building, for instance. But the rate is not going to come down based on the Fed reducing Fed rates. They could care less what the bond buyers don't care what the Fed says. They care what the availability is of bonds compared to the amount of bond traders there are buying those bonds because it's a product. You get a bond in your hand that you pay $1,000 for, and there's X number of those available and X number of people that are looking to buy them. If I got it right so far, sir?
you have. And of course, if the government needs money, they sell more bonds,
Yeah.
right? And so that causes some challenges in the markets. The other thing I think that's kind of interesting, kind of exciting, is if we can get control of inflation and bring it down, and get control of government spending and bring
And
it down, that will help bond rates to come down too. And of course, it also helps the equity markets because the discount rate, the rate at which you discount future earnings, the lower that is, that means that stock prices can be higher in the short term,
especially for companies like Tesla. Tesla's
especially for high growth companies where most of their earnings will come in the future. That's
right,
right.
right. So the key right now, in my opinion, and maybe certain shares my opinion or doesn't, the key right now is the U.S. government has been spending like a drunken sailor, and it was even worse in the first 4 months of this fiscal year. it was something like $411 billion more spending than last year, with only $11 billion in new income coming in. So the deficit was just going up even more. Now, when that deficit comes up, that means the government lady, well, she's not a lady anymore, it's a guy now. He says, okay, I got to sell more of these treasury bonds. And so here I got a whole bunch of them, guys, but now out of the same pool of buyers, maybe they don't want them so much. And so then the rate has to go up.
Right.
So the rate goes up, then that makes it, all the negatives happen. But if all of a sudden the government doesn't need as much money, he comes to the bond market and goes, well, I've only got 3 this month, guys. So that means that the bond price goes up and the interest rate goes down. That's what we're looking for. And for me, I think if they believe Doge is really going to get the cuts, if they believe the Republicans are going to back them, if they believe that the courts are not going to stand in their way, I think we could be looking maybe even 100 basis points in terms of drop in the 30-year Treasury.
Yeah, I don't pontificate on those things specifically, but the drop could certainly be significant and significant enough to make a material difference in the things that you just talked about: stock valuations, interest rates on mortgages, auto loans, all those things that consumers spend money on. That would be very helpful to the economy and to the average citizen. Absolutely.
Right. All right. Well, I wanted to get that in. Hopefully, this will be something. I think we talked on yesterday on the show. We talked about the importance of the arbitrage, the information arbitrage, and really understanding stocks. If you're going to play stocks, if you're going to play individual stocks, I think that was really maybe the most important thing we talked about yesterday. And today, quite frankly, understanding this bond relationship with the stock market and with the overall product and services market, having that understanding in right proportion should help you know how to vote and stuff, because we got to keep this spending under control at the government level.
And that was Randy's political ad.
You could have just goes, yeah, it makes sense to anyway. I know you've got, some limitations on what those regulators let you do. We need to get rid of some of you guys were not, you used to be able to say more, right? Like 25.
It's very restrictive. We have to be very careful.
Yeah.
And for good reason, because everybody's situation is different.
Sure.
I don't know the financial situation of any of your listeners. In fact, I don't know who the listeners are.
Yeah.
So I can't really make any,
Elon, he's one.
maybe.
He watches my show 3 times a day.
Yeah. And if I'm giving financial advice to Elon, it's going to be very different to him than if it is to probably any of your other viewers. Unless, Jeff Bezos is also listening, and Mark Zuckerberg and Larry Ellison.
Of course, Jeff listens.
There you go. Okay. Well, then perhaps we can do a special show for them sometime.
All right. I think that's enough of that. So hopefully this has been useful and helpful to you. If it has, put a like down there and comment below how much you like Cern Basher, because I always like reading all those comments, because you make a lot of comments about how much you enjoy Cern Basher. Or is it your slides? It's one of those. I'm not sure.
It's a couple of the slides. Yeah, the non-Cybertruck ones, I think.
All right, sir. Thanks so much for being on, as always. And to all of you out there, it's been great talking to you.
Thanks, Randy.